Hi. If you have liquid assets worth more than 5 million euro and you've ever thought to yourself, is my money really safe? Then this episode is for you. In the last 6 months, I have helped clients secure their portfolios worth over 80 million euro. And I know one thing, today the risk is not only due to the uncertain geopolitical situation in your country. It results from the lack of knowledge about how to safely invest your money in the dynamic market situation we're facing today. On top of that, there are elements such as lack of proper legal structure, bad tax decisions, or lack of succession security, especially if you're over 50 years old. That's why, based on conversations with my clients, I have collected 8 specific elements that will help you protect and multiply your wallet. The question that comes up first, most often, is about security. And the biggest fear? This is the current geopolitical situation in the world. Many of you are very direct. I don't want to keep money in my country. And no wonder. Geopolitical uncertainty, aggressive tax authorities, and additionally missing funds in the state budgets fuel your government's appetite to obtain the necessary funds at the expense of private saving of entrepreneurs. And here I fully agree. In such a situation, geographical diversification is absolutely a basic step. After all, you can keep some funds in your country and some funds abroad. The second question is where or in which country should you keep your money? This in turn depends on what you invest in, and sometimes what matters is what country you live in. For example, it's difficult for Poles to open an account in the US unless they live there. On the other hand, Europeans who move to United Arab Emirates will not always open an account in Switzerland. Sometimes they are sent to a branch in the Emirates, even if this is not the solution they are looking for. And if you want to invest in specialized financial instruments, it will be easier to find the right bank in Switzerland than in another country in Europe. And third important issue, before you choose a bank to work with, first, you need to ask the question, what do you want to invest in? If you want to diversify your portfolio in such a way that you invest part of it in crypto, then you need to be aware that majority of Swiss banks are only taking the first steps in this regard. Indeed, there are banks in Switzerland that do specialize in crypto. How to find the right one? If a bank tells you that at the moment it can help you to invest in 4 or 6 largest cryptocurrencies, it means that this bank is just getting to know the crypto market and they probably outsource the services. Look for the bank that is specialized in this market and serve all cryptos. That's all about it because, as it turns out, relatively few rentiers in the prime of their lives, 50 plus, decide to invest in the crypto market. You are rather looking for stability, security. Recently, I met a very enterprising lady client who decided to sell her business for about 25 million euros. Well, into her 50s, she decided to end her adventure with the business and move on to investing the money she earned. When we were discussing the arrangement of the structure for the assets, she used these words: no complications, no documents, no formalities. I have been running a business all my life. Now, I just want to relax and travel. At that time, we were talking about it. She got the last tranche after selling the company she founded and managed for so many years. Today, she is a rentier, and the only thing she dreams about is peace of mind. And this is very much related to security. And you can tell what she felt affected her sense of security. For her, it was important, where she could live safely. And this is the fourth element. Because a change of residence is indeed an additional security for your property. If you don't live in Poland, then in a way you are not subject to the jurisdiction of Polish authorities. If you don't live in Spain, you do not fall under the jurisdiction of the Spanish authorities. A few months ago, a partner of an international law firm in Barcelona told me that Spanish tax officers are the second most aggressive in the world, right after the US IRS. So where do you settle the most? In United Arab Emirates, in Greece, Switzerland, Cyprus, Spain. The safest for financial assets is, of course, Switzerland. Its tax rules, however, are a bit complicated and not everyone likes it. Many people still decide to go to Spain, even though the Spanish regulations are not friendly. In this case, they rather decide to choose Beckham law system or have the second home in Spain and keep the residency in another country, more friendly country. When you move from one country to another in Europe, remember to choose the right inheritance law. For example, if you have heirs in your home country or assets, for instance, real estate, be sure to go to a notary and choose the law of your country as the law of inheritance. It is a small step that will save your loved ones a lot of stress and costs. Another element to pay attention to if you are planning to move is exit tax. Such tax has been enforced in Europe for several years. Each country has its own regulation. Most often, however, it's charged on the income you would have earned if you had sold these assets on the day you moved out. In Poland, the tax is 19%, but there are countries where it's really high. For example, in Norway, it's over 37%. There are various ways to manage this problem, and in each case, it should be analyzed individually. Enough about moving out. Let's go back to asset management. I would like to talk about the fifth question you tend to ask me: how to manage assets well and who can help you with this. Many of you have been doing business so far and you can do it perfectly. You are aware that asset management is completely different competence, and that's a good thing. Otherwise, it could end up badly. So, which partner to choose for asset management? Sometimes you ask about opening a bank account. And those of you who have already done some research on the subject are asking about a family office. And here are some important hints. Open your account only in a reputable bank, because it is the bank that acts as a custody. It stores your funds. And a standing of a bank is a guarantee of security for you. Second, choose a partner to manage your assets. It doesn't have to be a bank, or maybe even it shouldn't be. I have discussed this many times. Provide yourself with an advisor who will take care of your interests. External asset management in Switzerland. I refer you to my broadcast on this topic. What should you pay attention to when choosing such external asset management? Do they speak your language? Who will contact you, and do you enjoy working with them? Who will actually manage your assets? And finally, negotiate your costs. Banking portfolio management fee should not be more than 1%. 1% of the value of your portfolio. And with the larger portfolios, it should be close to 0.8%. If you get a different offer, act, talk, negotiate. Finally, choose an advisor who will tie it all together from the outside. He will tell you where the hidden costs are, how to negotiate good partnership in managing your assets. You also need to remember that the rules of the game and thus the regulation change all over the world and all over the time. The larger your wallet is, the more careful you need to be. And all the more reason to have someone to guide you next to you. If you expect to earn 10 million euros now, will you see what to do not to lose them? And if you think you need assistance, contact me.